Did you know that there are college tax credits that families can receive in order to save thousands on taxes or maybe even get a refund? In this video, I'm going to cover the two main tax credits most families can take advantage of, what type of expenses are deductible, and how your family can maximize these savings. Now, I love this strategy. In fact, one of our families, they use this strategy after going through our full lesson inside Debt Free Degree Lab, which was less than an hour, and they ended up saving $2,500 per school year. I'm going to show you more about this family story later on, including a little hiccup that they ran into to make sure that your family can maximize the tax credit without running into that hiccup. But that said, of course, always whenever talking about any kind of tax laws, tax rules, tax credits, you want to run this by your CPA. So I have to say that disclaimer before we get started. Now, make sure you hit subscribe because as you can see, this is a unique strategy when it comes to paying for college, which is what we cover every single week. I release a new video with a new strategy on how your family can pay for college without student loan debt. Hello, my name is Jocelyn Pearson, founder of the Scholarship System, and that is what we do. We teach families how to pay for college without taking out student loans, primarily focusing on scholarships. But as you can see, we love to come up with unique strategies, and tax credits is one of them. So what are tax credits? Tax credits are dollar for dollar deductions when it comes to the taxes that you are owed. In this specific case, this tax credit can actually also be refunded if you get to where you don't owe anything up to a certain amount. I'll share that in a little bit. Now, this specific scenario with college tax credits are based on expenses that are paid. So for example, my own college experience, I got to where I had a free ride, plus I received an overage check every semester. So we actually did not have any college expenses coming out of our own pocket. Therefore, I could not claim these tax credits. I didn't have any bills to show them that I paid towards my college education because I fortunately had other people's money from scholarships and such to pay for my education. Now, if you're interested in learning how I pulled that off and how your student can too, make sure that you register for the free training. You can find the link at the description below or go to thescholarshipsystem.com/free training and get registered there. Now, before I get into the specific tax credits, I do want to let you know that these are capped based on income. These are also, of course, like I mentioned, required to be for expenses paid out of your own pocket. And then furthermore, these are capped at 4 years. So if your student is going to college for 10 years in a row, you cannot just keep claiming this every single year. Towards the end, I'm also going to show you how you can claim these. So there are two main types of college credits. The first is the American Opportunity Tax Credit. You'll see this written as AOTC, or the Lifetime Learning Credit, which is LLC. Now, there are slight differences between the two. So first, let's go into the American Opportunity Tax Credit. Now, this one is the one that's most used. For the income ranges to claim this tax credit, your family's adjusted gross income must be less than $180,000. So to get the full credit, for a joint filing, it has to be $160,000 or less. However, it phases out in increments on the way to $180,000. If your adjusted gross income on a joint filing is over $180,000, then you would not get this tax credit. If you are a single family, then that would just cut in half, or $90,000 as the cap. The maximum amount of the credit is $2,500. And then if that credit brings you to where you don't owe any taxes, but you still have more remaining of the credit left, you can receive that in cash up to $1,000. Now, I'm going to get a little nerdy on you here with some math, but basically the way that it works is the first $2,000 of expenses that your family pays towards college is 100% dollar for dollar on this credit. Anything after that is 25%. So you don't just immediately get the $2,500. You have to have a certain amount that's spent on the college bill in order to get that full credit amount. Now, this is for eligible schools, colleges, and vocational schools, but again, remember that it is capped at 4 years. Now, if you are interested in learning how to adjust your adjusted gross income, how to get it lower than $180,000, or how to get down to that $160,000 if you're right on the edge so that you can fully maximize this credit, comment below and write AGI video, and then I will add that to our list so that we can give you some tips on how to get your adjusted gross income down so that you can take full advantage of this tax credit. Now let's turn to the Lifetime Learning Credit. So the Lifetime Learning Credit has a different income range. So to claim this, then your adjusted gross income must not exceed $69,000 or $138,000 if you are joint filing. You can claim up to $2,000, which has to be 20% of $10,000 of qualified expenses for eligible students. Now, the one difference and the one benefit of the lifetime learning credit is that there is no limit on the number of years of higher education in which you can claim this. So perhaps maybe the first 4 years you would do American Opportunity Tax Credit, and then if your student has to continue going through college for longer than 4 years, then maybe this is an option. Now, the best part about this is actually it can be used for job skills. So it doesn't necessarily have to be a degree that your student is getting. It can actually be used for skill kind of trainings that your student can submit. So how do we claim these tax credits? Well, when your student is enrolled in programs, they will receive a tax form called the 1098-T. This is a form for the IRS that shows the eligible expenses from educational institutions, things that your student and you have paid for, along with any kind of scholarship money. So this is where, for me, it showed that my scholarship money completely covered the bill. I didn't actually have any out-of-pocket costs. However, if your family does, then it would show that. Now, you can still claim this if your school does not provide a 1098-T form, but you will have to make sure that you have documentation for everything, because you do not want to risk claiming this and possibly getting it refunded in cash and then having to pay it back. In fact, actually, if you accidentally make a mistake with this credit and you use it incorrectly, they can take away the ability for you to claim it in the future for 2 to 10 years. Another form that must be submitted is the Form 8863, and this is basically just your student's name and their social security. That way you can claim the actual credit. So the 1098-T form is how you can figure out what your family has paid and how much of the credit you can claim. And then the 8863 form, that one is to actually claim the credit. So in the end, what you do is you look at how much your family owes in taxes and then subtracts the credit. Again, if it takes you into the negative, say your family owes only $1,000, but you get the full $2,500 in credits, then you have $1,500 of credit left over. You can get up to $1,000 of that paid directly to you. Now, one thing I want to note with this is the 1098-T form will show any kind of expenses that the school has record of, but you actually can also include outside expenses. Maybe some examples would be anything that relates to the courses, tuition fees, course materials, any kind of supplies that they were required to have, any kind of enrollment or attendance fees for the educational institution. So all of these expenses can be put in there: books, supplies, equipment, anything that is specifically related to the courses your student is taking. Now, a few things that are not eligible for claiming as an expense for this credit include room and board, any kind of student activities, or athletic programs, unless they're taking a specific athletic course and then they have to buy things for that class. It is not eligible unless that's the situation. Insurances, equipment, transportation, personal living, or any kind of family expenses. So none of these would count. You cannot add these on to the 1098-T form to show that what you have spent on college, unfortunately. Now, who can claim these credits? Basically, it would be the person claiming the student on the tax return, or if they are independent, then of course they can claim this. And if you claim your student, then any expenses, even if they're paid by the student, if you're claiming them as a dependent, those expenses would be counted as something that you paid. So you can indeed claim those even if the student is who technically paid for that expense. Now, I mentioned earlier Jeff's story. You can see that he had a very long explanation of how his family got to a debt-free degree, and I love that they used so many different strategies, one of which was this tax credit strategy that we taught them. And again, if you're interested in Debt-Free Degree Lab, by the way, you can find a link down in the description below. Doors only open a couple times a year, but there is a link to a waitlist so you can learn about it some more. Now, going back to Jeff's story, one of the things that they confused was actually he tried to claim the credit on his side of the taxes and get the $2,500 credit. And then what they were hoping was that they could claim it again under their son's tax return. Unfortunately, that was not the case. Since their son was dependent on his tax return, then it was only able to be claimed once. So it's not like you can have you claim it and then also your student claims it. Still, in the end, they got $2,500 of a tax credit, which was huge. He would have had to pay that out of pocket in taxes. So actually what he did was, instead of paying it to the tax man, he gave that $2,500 to his son, and it got them to that free ride. It just would have been nice to get that extra $1,000. Now, if you want to read more, we're going to link to the specific IRS page in the description so that you can look up all the rules. But again, please remember to talk to your CPA, whoever it is that does your taxes, and make sure that you're eligible before you go ahead and claim this. Now, lastly, again, in addition to this, make sure that you register for that free scholarship training, because that is something that your student could be working on while you are focused on these tax credits. So this is a great way to tag team paying for college and work towards that debt-free degree. Again, my name is Jocelyn Pearson, founder of the Scholarship System and Debt-Free Degree Lab. I will see you in the next video.